may boost the case for boosters, Bloomberg's Nathan Hager explains.
A prior infection with COVID doesn't seem to offer much protection against Omicron. That's according to a large new study from Imperial College London that looked at all confirmed COVID cases in England between November 29th and December 11th. Researchers say prior infection only offers 19% protection against the new strain. That's about the same as the 20% from 2 vaccine doses. The study says a booster shot blocks anywhere from 55 to 80% of symptomatic COVID cases. In Washington, I'm Nathan Hager, Bloomberg Radio.
Thank you, Nathan. And we have a warning coming in about crypto craze. Antoinette Shore, she's a professor at MIT's Sloan School of Management, says the rise in crypto use is going to mean the rise of Ponzi schemes in places like New York, Miami, and elsewhere. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Denise Pellegrini, and this is Bloomberg.
Thank you so much for that update, Denise Pellegrini. Tim Stenovic and Katie Greifeld live in the Bloomberg Interactive Brokers studios on this Friday afternoon. We heard a couple of these headlines from Denise just now, but really worth diving into, Katie, because what we see happening here in New York, and I don't like to use the term feeling in talking about sentiment. I like to look at the data. And we've noticed, I think, both a shift, though, in the mindset of people I've been talking to, are certainly our colleagues, as well as people, friends and neighbors who live in New York, but also an uptick in the data. As I said, daily cases in New York City spiking to levels not seen since April.
Yeah, and I think it's become clear that just the spread of the Omicron variant is really accelerating. You're starting to see businesses respond. I mean, you have names like Citigroup, Citadel, Jefferies, telling their employees that they can work from home. I know a lot of those big Wall Street firms had been trying to get them back in, but they're also looking at the same data we are and having to respond.
Yeah, well, New York Mayor Bill de Blasio said the recent spike in cases will not prompt another school shutdown ahead of the winter break. 2 of New York City's biggest shows, Hamilton and the Radio City Rockettes Christmas Spectacular, those have been forced to cancel shows because of outbreaks. Katie, you mentioned some of the headlines that we've seen in the past few days. It certainly seemed like earlier in the week when we got the news about JP Morgan's conference in January in San Francisco, the big healthcare conference, that was kind of a turning point, because after that we heard a lot of companies saying, okay, well, we want you to work from home for the rest of the year, and even big tech companies saying, we don't know when you were going to come back to the office.
Yeah, I mean, I said this in the intro, it really feels like a bit of deja vu. Yeah. And I mean, we are entering conference season, the start of the year. That's when you tend to see all these big gatherings. A lot of corporations and companies and maybe reporters had planned on traveling to go to those. So it feels like everything is up in flux right now. How do you plan?
It does. And I got to tell you, the Consumer Electronics Show, CES, happening in Las Vegas in the early part of January. Surprised that, as of now, it's, to my knowledge,
Davos
it's still on.
Davos is still on, too.
Davos is still on.
Yeah, TBD.
Yeah, well, okay, we're going to keep you abreast of all the latest headlines. And in just a few minutes, we're going to be speaking with Dr. Ian Lustbader, clinical professor of medicine at NYU Langone Medical Center. This is Bloomberg Radio, and this is Bloomberg Business Week.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. An extremely choppy session, that's putting it mildly, with the Dow, the S&P on the minus side. NASDAQ now advancing by 76 points, up 0.5%. Volatility gripping markets. Investors bracing for a rebalancing of the S&P 500, as well as the expiration of equity derivatives, could turn out to be one of the busiest days of the year. S&P lower now by 14 points, down 0.3%. The Dow down 324, lower by 0.9%. NASDAQ up 75, up by 0.5%. 10 years up 1/32, 10-year yield 1.40%. Gold up 0.1% at $18.01 the ounce. West Texas Intermediate crude down 2.2%, 70.76 a barrel. After earnings, FedEx delivering a gain of 5.5%. Rivian, the electric truck maker, it is plunging after earnings, down now by 9.5%. Recapping, stocks mixed. S&P down 15, down 0.3. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, Katie Greifeld and I have been talking about it throughout the first bit of our program this afternoon, and that's the rising COVID cases that we're seeing here in New York City and around the world and around the United States just ahead of the holiday season. Here in New York, new daily cases are at levels not seen since last April. That was before the Delta variant ripped through the country. On a U.S. basis, we're seeing new COVID cases at levels that we saw on the downtrend of the Delta variant back in September. So definitely a concerning story playing out. Let's get some details from Dr. Ian Lustbader, clinical professor of medicine at NYU Langone's Medical Center. He joins us once again on the phone from New York City. How are you, Dr. Lustbader?
Hey, Tim and Katie. Thanks. Happy Friday. I'm doing well, but I'm definitely perceiving a lot of market volatility, a lot of emotional volatility, because patients are calling in droves with newly positive nasal swabs for PCR.
Huh. Wow. Okay, so that's interesting to note that because, it's quite a different tone than we had last week when we last spoke to you. And it certainly feels like things have shifted a lot where we are in a few days. I told Katie this earlier this week, but the lines outside of testing facilities in my neighborhood are stretching down the block, sometimes even to the next block, the number of people waiting for tests. What's going on, Dr. Lustbader? Is it a mix of people getting tested before traveling, or is indeed we're seeing a new surge here ahead of the holidays?
I think we're definitely seeing a new surge. We're seeing a number of patients that have been double and triply vaccinated. Colleagues that I work with in the hospital, nurses who've had 3 vaccines, have a runny nose, cough, cold. They get swabbed. They're PCR positive. I suspect most of these are Omicron, which are really breaking through the vaccines. And we are seeing a surge of, 20 to 25% increase, almost a doubling in the number of positive cases. So the good news, though, is that these really tend to be fairly mild. People have a headache, muscle aches, kind of like a mild flu, not nearly as bad as real influenza. And unfortunately, we don't have a lot of treatment now available for them. The monoclonal antibodies we are using, but now they're going to be rationed a little bit.
Well, given...
At least
I'm sorry, Dr. Lustbader. I did just want to ask, though, given, like you say, that, it seems to be more mild, the Omicron variant, it is breaking through, but you're not going to get as sick as maybe previously. I'm curious how much you think this current wave that we're starting to see build might delay the return to normal, whatever that looks like.
I think it is going to somewhat delay the return to normal. I mean, we've sort of been predicting spring when this will all be over. I still think, that will be the case. I do think Omicron hopefully is the final variant and maybe somewhat endemic or even like a yearly flu. Possibly will get a yearly shot for it, although, as we know, the flu shot is not really 100% effective either. My sense is that most people get over this quite well. We are reserving monoclonal antibodies, which we were giving out much more freely before, but now really can't do that for people over 65 or people under 50 or people below 65 that have underlying diseases, cardiovascular disease, diabetes, lung disease. So it is being somewhat rationed. And I think that's appropriately so, because I think we were giving it to mild to moderate symptoms, in people who would have gotten over this anyway within a few days. And in some ways, I think we were trying to make the patients happy, but they probably didn't really need that treatment anyway. The pills that are coming out, certainly the Pfizer pill is still going to be a little delayed. It's a combination with ritonavir, which is a protease inhibitor. That, has been used for years with HIV, very safe, but again, not approved yet. So really, we're treating people symptomatically.
Mm-hmm. And doctor, I mean, like you said, plenty of people double, triple vaccinated who have had breakthrough cases. I know plenty of such people in my own life. And I don't know, I'm curious if you have any concerns that might dissuade people from getting the booster, this sort of feeling that it's inevitable that I'm going to get it anyway. Why bother with another shot?
I think you raise a good point, and I think for the people who are vaccine hesitant over time, I think it just reinforces why bother doing this? I'm going to get it anyway. And to some degree, I think that's true. I think everyone will be getting Omicron sooner or later, unless you've really been able to isolate effectively. The bottom line is really the vaccines do seem to help with severity of illness, and I certainly feel better having gotten a third booster shot. It's very hard to measure specifically in any one individual if they're exposed, because it really depends on the viral load. If someone is very sick with Omicron and they cough in your face, you're going to have a high viral load. So it's very hard to measure, but I think the vaccines are helpful. I think if you haven't been vaccinated, certainly be very careful going out in crowds, because there's a long incubation period. People seem very minimally sick, and they can be very contagious.
Dr. Lustbader, we have 30 seconds left with you. Should people rethink gathering together for the holidays?
Yes, to some degree, I think they should be careful. I'm not sure how. I think everyone is going to wind up with Omicron sooner or later. But I think if you are healthy and you've been triple vaccinated, get together with family. I think if you haven't been vaccinated, or if you have underlying disease, I would be very careful at this point, and until we have a little more data on Omicron.
Dr. Ian Lustbader, we are really grateful you join us each and every week. He's clinical professor of medicine at NYU Langone's Medical Center. He joins us on the phone from New York City. He said it several times, Katie, everyone is going to get it sooner or later.
And I mean, that's the mood music. It feels like everyone I talk to, they're just, looking at their watch, wondering when their time is due.
All right. Such is where we are right now.
Happy Friday.
Happy Friday, everyone. You're listening to Bloomberg Radio. This is Bloomberg Business Week.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenevec and Katie Greifeld live in the Bloomberg Interactive Broker Studio in New York. It's the Silicon Valley trial that has been years in the making and has watched much beyond Silicon Valley. We're talking about the trial of Elizabeth Holmes, the 37-year-old entrepreneur who's facing fraud and conspiracy charges in the collapse of Theranos, which was once valued at $9 billion. We're going to be getting an update from Ed Ludlow, our West Coast correspondent, who's on location in just a few minutes. In the meantime, a check of what's going on with this trading day. Here's Charlie Pellet.
Thank you very much. Volatility in a word. And here's what's going on. We have got the S&P 500 index down 23 now, lower by 0.5%. The Dow down 383, a drop there of 1.1%. NASDAQ up 48, higher by 0.3%. 10 years up 230 seconds. 10-year yield right now 1.40%. Gold up 0.2%, 18.02 the ounce. And West Texas Intermediate crude tumbling 2%, 70.93 a barrel right now on WTI. NASDAQ 100 index higher, little changed right now, up less than 0.1%. The Russell 2000 up now by 1.3%. Volatility, though, gripping markets as investors brace for a rebalancing of the S&P 500 with the expiration of equity derivatives. Stock moves being magnified by intense activity in options trading, making this one of the busiest days of the year. Southwest Airlines CEO Gary Kelly has tested positive for COVID-19 days after appearing with other airline industry executives at a Senate hearing. Southwest Airlines shares, they are up now by about 0.6%. A UK study finds the Omicron variant gets around a previous COVID-19 infection. The research from Imperial College London underlines the importance of booster shots. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health.
These viruses are moving through the population. Vaccines are protecting us from severe disease, but it's the unvaccinated population that's really going to be the population that's going to put a stress onto our healthcare system, because these viruses are spreading incredibly efficiently, and they're going to find unvaccinated people, and the disease in unvaccinated people is yet to be really determined how virulent this virus is.
Dr. Pekosh with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine stocks that we track, mixed picture. Pfizer down 1.7%. Its German partner BioNTech, its ADRs up now by 1%. AstraZeneca's ADRs down 1.3%. Moderna rallying 4.3%. J&J Johnson & Johnson down 2.3%. Recapping stocks mix, the Dow, the S&P lower, NASDAQ higher, S&P down 0.5%, 10-year yield 1.40%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, closing arguments are underway in the trial of Elizabeth Holmes. The 37-year-old entrepreneur is facing fraud and conspiracy charges in the collapse of Theranos. It's a company that was once valued at $9 billion. Ed Ludlow is West Coast correspondent for Bloomberg News. He's on location for us from the San Jose courthouse. Ed, give us an update about what exactly is going on there right now as we speak.
Yeah, so Elizabeth Holmes' defense team are finishing their closing arguments. They have just a few more minutes to go after a brief recess, at which point the prosecution will be allowed to give a rebuttal of everything that the defense argued, having already made their own closing arguments. At that point, the judge will essentially turn to the jury and give them a long list of instructions. This is before they have a chance to deliberate. So it's possible that this might be the end. You know, after 3 months of trial, we might have jury deliberation this Friday afternoon, although it could equally go into Monday, Tuesday, Thursday of next week.
And talk about what's at stake here. I mean, if Elizabeth Holmes is found guilty, what kind of sentence are we talking about?
Yeah, so in 2018, she was originally charged with 12 counts of wire fraud, essentially, defrauding investors. One of those counts was thrown out, so she faces 11. The kind of maximum penalty is 20 years in prison, although, you know, all of the great legal minds following this case think it's highly unlikely that the penalty would be that severe.
So what's more realistic?
Yeah, it's hard to say. It also depends, of course, of how many of the specific counts that she's found guilty of. You know, it's interesting. The prosecution has presented like this very broad body of evidence, much of it documentary evidence, right? Much of it based on whistleblower testimony of people that worked at the company. They basically say this is cut and dry. You defrauded investors. You made false statements about technology and the integrity of commercial agreements. What the defense has done is try and cast doubt in the jury's mind by saying it's not as clear-cut as that. This was somebody acting in good faith. She was talking about a prototype product, but she genuinely believed that down the road it would be capable of the things that they were targeting, and that what she was pitching to investors was that future vision. These were supposed to be long-term investors. So how many of those individual counts they find, that will result in the penalty.
And Ed, you have a cool job. You travel all over the country. You are outside the courthouse right now. I'm curious what the vibe on the ground is like. Are there lines there, or what are you seeing?
So for our global Bloomberg radio and television listeners, Katie knows me very well, and this job is not as glamorous as she makes out. But it's interesting being here because I can tell you that this Friday we peaked, right, in terms of the number of people. The line goes out of the courthouse. These are not just members of the media, they're family members. We understand there are actually people being paid to stand in line for other people who come later, right, secure their place. There are people that get here at 3 a.m. local time to guarantee they have a place in the courtroom for when the doors open at 7:30, the trial begins at 9 o'clock. It's just fascinating because this was a private company. There was a lot of high-profile investors, people like Henry Kissinger, Mattis, who were on the board, right? But it never made it to the public markets. And this was all between 2009, 2015, when the John Kerry Wall Street Journal kind of expose first came out. And so the intense scrutiny on this trial is astounding.
I'm wondering about ramifications in the last minute that we have, Ed, because you did talk about the high-profile investors, but at the same time, we saw a lot of, traditional Sand Hill Road venture capital firms pass on the opportunity to invest in Theranos.
Yeah, I mean, this is the great Silicon Valley story, right? Fake it until you make it. But it could, some say, set a new precedent. And you see, like, with some of the SPAC transactions of the last 2 years, regulators are taking greater scrutiny now of claims of companies in the efforts to raise funds. And that fake it till you make it mantra, maybe that doesn't last as long anymore, guys. But in Silicon Valley, it's certainly been the way of recent years.
Ed Ludlow is West Coast correspondent for Bloomberg News, joining us on location from the San Jose courthouse. You can follow him and his updates, not just on the Bloomberg terminal, but also by following him on Twitter. You can find him at Ed Ludlow. Did you read that book, the John Kerry book, Bad Blood?
I couldn't put it down.
I know, I couldn't either.
It's
such a good book.
I think Ed makes a great point. This was all in the private markets. I mean, Theranos was valued at $9 billion at one point, which is enormous, but it's solidly a mid-cap company. But still, I mean, all eyes are on this.
Massive.
Yeah, that's true.
Yeah, and transparency questions too, right? If it would have been a public company and had to answer questions from investors. Well, let's get an update on world and national news. Denise Pellegrini standing by in the 1130 newsroom here in New York. Hey, Denise.
Hey there, Tim. Well, the White House is warning the unvaccinated are looking at a winter of severe illness and death because of how quickly Omicron spreads. The nation's top infectious disease doctor, Anthony Fauci, is saying Omicron plus Delta equals double trouble.
We are now facing Delta surge, and we're looking over our shoulder at an oncoming Omicron surge.
And Fauci also says get vaccinated or boosted ASAP. Biden administration wants to keep kids in school this time around, though. CDC Director Dr. Rochelle Walensky says she hopes a new test-to-stay program for kids who might have been exposed to COVID makes the grade.
No less frequent than twice a week in order to employ the test-to-stay protocols.
And Rochelle Walensky there at a COVID briefing. Escalating showdown with Moscow. The U.S. is now rejecting Russia's demands NATO deny membership to Ukraine and other former Soviet countries. White House Press Secretary Jen Psaki, though, focusing on ongoing efforts to diffuse tensions.
The North Atlantic Council statement yesterday underscored that any dialogue with Russia would have to proceed on the basis of reciprocity, address NATO's concerns about Russia's continued dangerous and threatening behavior.
And on the domestic front, Psaki says despite setbacks, President Biden not giving up on getting Congress to pass his Build Back Better plan. And COVID is boarding NHL plans. NHL, we're hearing now, postponing Colorado Avalanche and Florida Panthers games. And this is through December 25th. No games for those teams all the way through December 25th due to worries over positive COVID-19 tests. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Denise Pellegrini. This is Bloomberg.
Thank you so much for that update, Denise Pellegrini. Tim Stenovec and Katie Greifeld live in the Interactive Broker Studios at Bloomberg headquarters in New York. Katie, this story among the most read on the Bloomberg terminal, all about JP Morgan bosses hooked on WhatsApp fuel $200 million penalty. This story by Ben Bain and Hannah Levitt. JP Morgan executives were supposed to make sure employee communications were archived for regulatory scrutiny, but for years, even the bosses were using their mobile phones to tap out work-related messages, a practice so pervasive that U.S. authorities dropped the hammer Friday, imposing $200 million in fines.
I mean, this is such a great story, and everyone, it seems like. The story names that managing directors and other senior supervisors shrugged off surveillance duties. They were using WhatsApp, personal email addresses. That caught the attention of the SEC and the CFTC, who, like you said, dropped the hammer. $200 million in fines. That's hefty.
Okay, so I'm thinking about, I've never worked at a bank, okay, full disclosure, but I'm thinking about the way that I communicate. Look, I'm thinking about the way I communicate with you, okay?
Right.
You and I are partners, right? We anchor Quick Take stock each and every day at noon Eastern time. You can find it at bloomberg.com/QT. And, you know, I was thinking about this today when I was reading this story. Like, okay, so you and I will text each other. We'll send tweets to each other that are interesting that perhaps we want to feature in the show.
Perhaps.
We'll email each other.
We will.
And we'll get in touch through, you know, Instant Bloomberg, right? The IB on our system there. And we have Slack, too. You don't really use Slack that much.
Yeah, I'm not a Slack gal.
Yeah.
It's too much.
But the point is, you know, if you are communicating with someone there who's a colleague and you have stuff to talk about, there are a lot of different ways to do it.
Yeah, I mean, this is one of those stories that causes you to say, whoa, am I okay? And there is an interesting detail in here that there is some blueprint. In 2006, the SEC fined Morgan Stanley for how they kept their records, but that penalty was only $15 million.
Wow.
We've seen a lot of inflation since then, but still, that's a lot less than $200 million.
Well, be sure to check out this story. Again, it's on the Bloomberg terminal. Among the most read, Hannah Levitt and Ben Bain are the authors. It's Bloomberg Business Week, and you're listening to Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P lower, NASDAQ higher. Volatility is gripping financial markets as investors brace for a rebalancing of the S&P 500. Along with the expiration of equity derivatives, moves are being magnified by intense activity in options trading, potentially making today one of the busiest days in terms of volume of the year. The S&P down 17, drop right now of 0.4%. The Dow down 342 points, down by 1%. NASDAQ up 85, a gain there of about 0.6%. NASDAQ 100 index up 0.3. Russell 2000 up by 1.4%. 10-year up 2/32, 10-year yield 1.40%. Spot gold up 0.2, 18.02 the ounce. And crude, West Texas Intermediate down 2%, 70.93 a barrel. After earnings, FedEx up 5.9%. Rivian after earnings down 8.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, McDonald's was once celebrated in black entrepreneurial circles. Now, though, it's settling with black franchisee owners who say that they were blocked from the best and most profitable locations. In fact, in a little over a year, McDonald's has faced multiple lawsuits that McDonald's itself practices its own form of redlining. It's the subject of a detailed story by Susan Burfield, senior investigative reporter for Bloomberg Business Week. She joins us on the phone from Brooklyn. Joel Weber joins us as well, editor of Bloomberg Business Week. He's on the access line from Brooklyn. Joel, to understand the story of what's going on right now at McDonald's, you have to go back decades, all the way back to the 1970s and the 1980s. What did McDonald's do then in order to attract black franchise owners?
Well, it was one of the first corporations that really did a good job of being proactive about welcoming black franchisees. And there's some nuance to that, but for the large part, and this is what you said at the top there was an entrepreneurial spirit and welcoming of the black community to own McDonald's. And Susan's reporting really, which is just incredible, but largely centers on one character, a fellow named Herb Washington, who kind of speaks to that, comes from that era, and started with one franchise and quickly amassed others. At one point, he had in the 20s. But they were never quite the best locations. And that led to a lawsuit that just settled yesterday. But Susan, before we get into all that, who is Herb Washington, and what was the opportunity that he saw in owning a McDonald's?
Yeah, so thanks. I think for Washington and a lot of other black entrepreneurs, McDonald's offered them an opportunity to own a business and to be part of a system at a time when those kinds of opportunities were often denied to them. And so, Herb had been a track star in college. He briefly played for the Oakland A's, and then he decided he wanted to be a businessman. He was given a first restaurant in Rochester, New York, in a neighborhood that was pretty impoverished, and mostly black and Hispanic residents. And what he realized over the next couple of years is that there was a pattern at McDonald's, and that was that they initially believed that it was best to put black owners in black neighborhoods. Civil rights activists wanted it. It seemed good for the communities. Definitely was good for McDonald's. But over time, and what Herb's experience showed, is that also served to constrain them to those neighborhoods and made it harder for them to own restaurants in communities that were either more diverse or more white and well off, where the restaurants were usually easier to run and often more profitable.
And Susan, walk me through how this relationship works, because McDonald's owns the actual restaurant building, right? And then, franchisees such as Washington have to pay them rent?
That's right. everyone calls them owners, but what they own really is the equipment inside the restaurants, the sign, outside the restaurant. McDonald's owns the building. The franchisees pay rent. They pay a percent of their sales to McDonald's. They pay all kinds of fees to McDonald's. Of course, they have to, follow McDonald's rules. And so they are beholden to the corporation. McDonald's, of course, wants them to succeed, but, if they don't, McDonald's is not really responsible for helping them. So when the franchisees or if franchisees fall into financial trouble, sometimes they have to take on a lot of debt for these restaurants, or McDonald's asks them to renovate restaurants. That can be quite costly. They bear the burden of those costs.
So bring us up to speed to where we are right now, Susan, and where Herb Washington is with his lawsuit. What was he looking for, and what's the latest?
Yeah, so Herb Washington filed his lawsuit alleging racial discrimination in the ways that we've just talked about in February of this year, and his was actually the fourth in about a year to make similar allegations. And last week, McDonald's settled one of the other lawsuits brought by two other franchisees. And just yesterday, it settled with Herb Washington. It bought him out entirely. So it purchased 13 of his restaurants his restaurants are total 13, and paid him $33.5 million for them. So as of yesterday, Herb Washington, after 40 years, is no longer part of McDonald's, and his restaurants are in the hands of other franchisees.
Which speaks to there's two lawsuits that you mentioned there. One was a class action lawsuit that settled a week ago. There's two other ones that you mentioned in the story that are also related, and just curious, like what does this mean all together when you step back and think about these culminating lawsuits and somebody like Washington, like bring it all together. What does it all mean, Susan?
Yeah, well, I think McDonald's is being held to account by the very people who, it has depended on for many years to help it profit in the Black community, and, many of whom have profited themselves. But, they are asking McDonald's to consider how it's treated them over many decades. McDonald's, of course, is settling, is not admitting any guilt, makes a point of saying that the court has not found that it's violated any laws. But nonetheless, it wants these problems and these people to go away.
And Susan, quickly, I am curious, are there any numbers we can attach to what this kind of version of redlining has meant for those franchisees who are in these areas?
Yeah, so in the lawsuits, some of the franchisees claim that their stores brought in about $700,000 less than stores owned by other operators. And so you could figure an average store these days makes about $2.9 million. So, it's not that they're not making anything, but $700,000 sales difference is pretty considerable.
Well, it's just a great read, Susan. Thank you so much for taking the time and for joining us on Bloomberg Business Week. Be sure to check out Susan's story on the Bloomberg terminal. You can also read it at Bloomberg.com as well. McDonald's made enemies of Black franchisees. Now it's settling, is what Susan's story is called. It's Susan Burfield, Senior Investigations Reporter at Bloomberg Business Week. She joins us on the phone from Brooklyn. Also joining us, Joel Weber, Editor at Bloomberg Business Week. He's on the access line from Brooklyn as well. Well, coming up in just a few minutes, it's our countdown to the close with our friends at Bloomberg TV. You're listening to Bloomberg Radio. This is Bloomberg.
countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. 60 minutes left in the trading day, in the trading week. Romaine Bostic still here. Taylor Riggs still here. Kelly Lyons, believe it or not, hasn't left just yet. Joined right now by our colleagues Tim Stenovic and Katie Greifeld. Carol Master just couldn't hang for the final day here. We do want to welcome in full our Bloomberg audiences across TV, radio, and YouTube as we count you down to the close here. You're looking at an S&P 500 right now, down about 0.5%. You're looking at a NASDAQ index right now that is in the green, and you're looking at a Russell 2000 that's in the green. Katie?
Yeah, it's hard to make heads or tails of this market, though. I'm going to bring it up. It's triple witching day. It comes once a quarter. You have indexes rebalancing, options expiring. You're seeing that in the volume. I mean, I'm looking at the S&P 500. Volume is about 20% higher than the 20-day average. So, again, it's playing out in weird ways if you look at that cross-index picture, Tim.
Yeah, one thing that really jumps out to me in today's trade is not what's lower, but what's higher when it comes to especially the consumer discretionary stocks. I mean, we're seeing headlines about New York, right? Reporting over 20,000 COVID-19 cases, a brand new daily record.
Yeah.
But shares of, Royal Caribbean, Norwegian Cruise Line Holding Company, Carnival Cruise Line, MGM, Expedia, all higher on the day.
Well, what are hospitalizations? What are deaths?
Right. It's a really good point. And understanding, too, what we've been through as a country and as a city, and that we have a good idea of actually how to handle it, right?
Yeah, and I think, look, I mean, I think we have to sort of be clear here that the main thing that's really been driving the markets this week has really been much more about monetary policy, that macro picture. When you look at the declines that we're seeing here on a weekly basis on the major indices here, that's really reflective here of that pivot that we saw on the Fed. I don't know if we can put it up for our TV audiences here, but right now you're looking at a S&P 500 that's down about 1% here on the week. You're looking for a NASDAQ down about 2% or so here on the week here. So despite some of the daily moves, including that 1% move higher on the Russell 2000 on this Friday, that is still down about 1% on a weekly basis, Kelly.
Well, and what's interesting, Romaine, is that on the headline level, 0.4% decline on the S&P 500 doesn't seem that dramatic, but really the bulk of the equities within the index, the members, are lower today. Most of the major industry groups are down, led lower by the cyclicals. It's energy, financials, industrials on the bottom. Energy down 2 full percentage points. The only sector that is actually in the green today
What's that?
Is real estate, up about 0.5%. And what's interesting, it's like, okay, you can talk about the bond proxies as much as you want. 140 is where we are on the 10-year.
Okay, all right. We talk about some of the individual movers here. I mean, look, Apple, we started this week. We all had the champagne and the confetti out for that, of course, that $3 trillion market cap. It's not going to get there this week. 172 right now and change is where Apple is trading, up about 0.3% on the day. U.S. Steel down here 1.5%. They actually came out with an interesting forecast here, projecting quarterly results that are actually going to be a little bit lower here. And they talked a lot about that macro picture and some of the demand dynamics that have favored it here in 2021, saying that that's not necessarily going to see that type of strength in 2022. And how about this? Darden Restaurants. Caroline's not here. She loves the Olive Garden.
Who doesn't? Those breadsticks? Yeah. I mean, yeah. Kayla, you know what you're
she's into that fettuccine Alfredo thing. And, look, we saw the big rebound. The comp sales were actually pretty good, and even the forecast they gave was pretty good. You're talking about 29% year-over-year growth here, but still some concerns here about how that is going to continue. Also, their CEO stepping down here. And I don't know if you guys remember that great Starboard, when Starboard was sort of rattling the cages on Darden, and they put out that 300-page report back in 2014 where they said, all you got to do is salt the pasta water.
That was amazing.
And that'll solve all your problems. I mean, in fairness, it was a lot deeper than that. But we should point out Eugene Lee, that was the CEO that Starboard effectively put in place after they took over the board there. He is stepping down here. The president is going to take over on an interim basis.
Love the facts and the perspective that you bring. Let me bring you some other facts and perspective.
And salted water.
Katie, this was interesting. You talked about some of the volatility as of late. I'm going to bring us back to technology as well as we're thinking about some of the open interest. Remember, open interest, it does include calls and it does include puts as well. So this isn't a directionality bet, but it is maybe perhaps a volatility bet and a interest bet, even though it doesn't necessarily mean that it goes higher. And it really has been this focus on big tech, Tim, and the NASDAQ 100,
which again today is really playing that defensive role, but that really has been where all the volatility has been.
Yeah, I want to bring our conversation back to talking about the virus, because certainly that's the mood here in New York and the mood around the country as we see cases spike. And Taylor, I think you made a really good point earlier to look at hospitalizations and to look at what we've learned about this virus over the past 22 months. Let's take a listen to what Andrew Pekosh, the Johns Hopkins Bloomberg School of Public Health professor and virologist, said a little earlier on Bloomberg TV. Check it out.
COVID-19 is looking more and more like seasonal influenza. The vaccines are going to prevent some level of infection, but not all. But they're going to make a really big dent in terms of the severe disease. And that is probably where 6 months, a year from now, we're going to really be settling in terms of managing this disease.
Yeah, once again, Andrew Pekosh, the Johns Hopkins Bloomberg School of Public Health professor and virologist. We should note the Johns Hopkins Bloomberg School of Public Health. It is supported by Michael R. Bloomberg, founder of Bloomberg LP. Romaine, I got to tell you, we talked to Dr. Ian Lustbader at NYU earlier in our program, and he said this is the type of thing he thinks everyone is going to get the Omicron variant. And he actually says that he's hopeful that by the spring, this is going to be the last variant, and this is the way that the virus could actually end. I know that's, we don't know that yet.
We'll leave the speculation to the doctors and scientists. I mean, and to Taylor's point, I think, it does help to maybe look a little bit closer at hospitalizations, deaths, and severe illnesses to get a better sense of where we are. Look, I think anybody who's walked around the streets of New York, and I'm sure you're seeing this play out in other cities, the lines at some of these testing centers, the lines at some of these vaccine centers are around the block, and we did not see that just even a couple of weeks ago. So a big change here. And I guess the real question, guys, really becomes is, how does this at all affect economic activity? We've had some anecdotal evidence that we've seen some cancellations in airline flights, but then we were talking a little bit earlier, Kaylee, everyone's going to go see Spider-Man at the movies. So
well, some people are at least, but fewer people may be working in the office. We're seeing a lot of the big Wall Street banks, for example, telling people not to come at least through the holidays. And then it becomes a question, what happens to the coffee shops that are, on Wall Street? And it may affect activity, even if, to Taylor's point, we're not seeing higher hospitalizations and deaths. Just cases still mean you have to quarantine.
I think it was Alicia Levine over at BNY Mellon Wealth Management that said that shock value of all these headlines we're sending out, it has lessened because we're just unfortunately used to it at this point. But you do bring up a good point.
Used to it or tired of it?
Both. Jinx, Kaylee. But it does sort of tie in as we continue to talk about the markets, where fascinating, a BOE that is saying, okay, we hear you variant, but I see inflation. Then you have an ECB that says, I see you inflation, but I really hear you variant. And it really is that push-pull in the market. And at least for Federal Reserve, thinking about an inflation story that is the bigger story.
I mean, just looking at the dot plot, those updated projections.
Romaine doesn't like
I
that.
got it. We got to talk about the dot plot. It's clear from those dots that the Fed is at least more focused on inflation at this point than they are any potential variants.
All right,
that could
I'm
come.
going to save you from any dot plot shame, Katie. That is going to do it for our cross-platform coverage. We'll be back again together live on TV, live on radio, and on YouTube at 4 p.m. for our Beyond the Bell coverage when we take you through today's market close.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld live in the Bloomberg Interactive Brokers studio in New York. I think Taylor made a really good point, Katie, when we were talking about the virus headlines that we see. Although we're all doing our best to avoid getting infected or in some cases perhaps reinfected, the at least equity market is telling us that, hey, this is something that we know how to deal with. And I don't want to, I just want to draw the contrast between when we heard about the new variant the day after Thanksgiving. Mm-hmm. You were working that day. I wasn't.
Yeah,
the volatility that we saw that day.
That was nuts.
It was nuts.
Yeah.
But we've
I actually
learned a lot
went and got
then.
my booster shot that night.
Oh, I'm so glad.
Yeah, reading those headlines all day. And I mean, if you look under the hood of the stock market, I mean, the reopening stocks really getting a bid today, but I mean, that's a different tone than what was the case for, I was looking at the weekly numbers. I mean, coming into today, Carnival was down over 9% for the week. So you were starting to see some concerns. But to Romaine's point, I mean, how much that had to do with the Fed taking some of the speculative fringe out of the markets, who knows? It's really hard to untangle at this point.
It is. We should note that here's where we are as the week is ending. The Dow looking like it's going to finish about 1.2% lower. I mean, look, we still have, close to an hour left of trading. The S&P 500 on pace to close at 1.4% lower for the week, and the NASDAQ down about 2.5% for the week. As we mentioned, though, we still do have about 50 minutes left of the trading day. We're going to be covering all the market moves here on Bloomberg Radio, and we'll join our friends on Bloomberg TV in a few minutes as well. Well, let's get a check of the latest world and national news. Denise Pellegrini is standing by in the 1130 newsroom in New York. Hey, Denise.
Hey, well, the news isn't good when it comes to COVID. As we've been reporting, New York City reporting now a new daily record for COVID, 21,027 new virus cases in a single day. And Dr. Ian Lustbader, professor of clinical medicine at NYU Langone Medical Center, telling us just a few moments ago here on Bloomberg Business Week Radio, people are scrambling to get tested.
I'm definitely perceiving a lot of market volatility, a lot of emotional volatility, because patients are calling in droves with newly positive nasal swabs.
And all that testing is resulting in more cases. And New York City's biggest shows, Hamilton and Radio City Rockettes' Christmas Spectacular, well, they have now been forced to cancel shows because of the outbreaks. Strong language from the White House COVID response team about the transmissibility of Omicron. COVID response coordinator Jeff Zients.
For the unvaccinated, you're looking at a winter of severe illness and death. For yourselves, your families, and the hospitals you may soon overwhelm.
And so that's the assessment there from the COVID response coordinator, Jeff Zients, at the White House. And the latest research on Omicron may boost the case for the boosters that you guys were just talking about. Bloomberg's Nathan Hager explains from Washington.
A prior infection with COVID doesn't seem to offer much protection against Omicron. That's according to a large new study from Imperial College London that looked at all confirmed COVID cases in England between November 29th and December 11th. Researchers say prior infection only offers 19% protection against the new strain. That's about the same as the 20% from 2 vaccine doses. The study says a booster shot blocks anywhere from 55 to 80% of symptomatic COVID cases. In Washington, I'm Nathan Hager, Bloomberg Radio.
And we're also hearing that COVID is boarding NHL plans, you might say. NHL postponing more games. Denise Pellegrini, Bloomberg Radio.
Thank you so much for that update, Denise Pellegrini. Tim Stanovic and Katie Greifeld live in the Bloomberg Interactive Brokers studio in New York. A really interesting story catching our attention on the Bloomberg terminal has to do with crypto. MIT professor is warning that the lightly regulated market poses dangers, essentially saying that areas of the country that have seen explosive growth when it comes to crypto, namely New York City and Miami, could be facing a Ponzi scheme risks with a push into crypto.
Yeah, and I mean, let's not forget Miami Mayor Francis Suarez. He's vowed to take his paycheck, part of his 401k payout in Bitcoin. And then incoming New York City Mayor Eric Adams has said he'll take his first 3 paychecks in Bitcoin. I feel like when they made those statements and promises, the line was going up, Tim. And I mean, if you look over the past month, that Bitcoin has fallen roughly 30%. So that in and of itself shows some of the risk.
But that's a pretty good thing for Eric Adams, right? If he gets his paycheck in crypto, right? And then it goes higher?
If it goes higher,
yeah.
I mean, I don't know. The good old U.S. dollar, I feel like it's
that
a
old thing?
Stable store of value.
Did you say the word stable?
I sure did. I didn't say stable.
You didn't, but that's something that I know you like to talk about.
I was thinking it. But I mean, Bloomberg had a great story on this just a few weeks ago about the risks of taking your paycheck in Bitcoin. Yeah, if he gets his first 3 and then it goes up 30%, that's pretty great. But who's stopping it from going down another 30?
Yeah, look, who knows which direction it's going to go in. What do you make of the idea that this professor from MIT essentially warning that you could see some sort of Ponzi scheme risk in areas that embrace crypto?
I think it's an important risk to raise. And I mean, the point that she is making in particular is that if you encourage citizens to use crypto, that raises the risks of, having to bail them out. And it just feels like it opens such a can of worms if you do encourage that. And I know Miami at least has proposed creating a Miami coin. A lot of questions about that as well.
So you're not ready to take your paycheck in crypto?
I'm still there for the good
I asked you a few
old
weeks
US
ago.
dollar.
Yeah, same. Yeah. All right, well, it's Bloomberg Radio. More crypto coming up in a few minutes. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet of Volatile Friday. We're on track for a losing week. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlotte. U.S. stocks are mixed, and like you said, in a volatile session. Dow's currently down 417 points, was down 600. S&P's dropped 32, while the NASDAQ is higher by 20. The U.S. 10-year yield at 1.4%. Gold is little change. Oil is down, and Bitcoin is falling by 2.7%. Among the main 11 S&P sectors, only real estate was in the green. Energy and financials were under pressure. And leaders to the upside in the Dow, IBM and Boeing, while Goldman Sachs and Home Depot led to the downside. After earnings, FedEx rose as much as 9%, while Rivian fell as much as 15%. And in other news, New York reported over 20,000 COVID-19 cases. That's a new daily record. Wrapping things up, tobacco name Altria rose for a 13th day. That's the longest streak since at least 1980. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg-type squawk, SQUAWK on your terminal line, Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, it's time now for our weekly crypto update, brought to you by Interactive Brokers. IBKR charges margin loan rates from 75 basis points to 1.59%. Rates subject to change. Learn more at ibkr.com/compare.
Tim, it feels like Bitcoin cannot get off the ground. We are closing out the 5th straight week of losses. The price of Bitcoin now below $47,000 per coin. We're going to talk to Michael Sonnenschein. He is the Chief Executive Officer of Grayscale. He joins us on the phone from New York City. Michael, there's so much I want to get into with you, but I feel like we have to start with the biggest cryptocurrency out there, Bitcoin. What is going on? It feels like all of the excitement has really exited the crypto markets.
Well, first of all, great to be back talking to you guys. But I have to say that prices have never been, and I don't think anytime soon will be the indicator of excitement or activity in and around Bitcoin or the crypto asset class. I think from the lens that we look through it at Grayscale, there is no question that there is still as much as ever, if not growing, excitement around the asset class, the use cases being developed, applications being developed, wallet growth, user growth. Price is not going to be the best sentiment indicator for activity on these networks.
Okay, fair point. But I am curious to hear your explanation for why Bitcoin is down 30% over the past month.
Well, listen, as we've seen time and again, Bitcoin has a period repeatable pattern rather of going through these, bubbles and bursts. And each time it does that, you see the price get a little bit overextended, course corrects, forms a new base, and then usually continues to move out to new kind of all-time highs. The Bitcoin price has obviously had a meteoric rise throughout 2021. And I think what's so inspiring about being involved with the asset class is that it means something different to everyone. So in some circles, Bitcoin may be seen as a risk asset. And so in a world in which investors may be taking money off the table in risk assets, as we may be seeing yet, another flare-up around the COVID-19 pandemic, or investors may be thinking about it as a, store of value, a hedge. Everybody is using this as a slightly different tool. And so over time, we've found that investors will continue to allocate to the asset class. But after a year when it's had the run that it's had, there certainly could be some profit taking.
Hey, Michael, we haven't had a chance to speak with you since the crypto executives faced questions from the House and the Senate this week, the House last week. I'm wondering your takeaways from those hearings and if you think that regulators and lawmakers get it.
I mean, Tim, if you rewind the clock 24 months ago, you couldn't even get crypto to be spoken about on the floor of the U.S. Congress, right? And now we're having these very meaningful conversations that really underscore, the democratic, process that we have. The conversations that we've been seeing taking place are really informed, thoughtful questions being highlighted by Congress, right? They're really listening and learning about the crypto industry. And instead of really taking the time to focus on the exaggerated risks or money laundering or hacks or ransomware, they're actually starting to really ask questions about the benefits of the asset class, using it to democratize finance, using these technologies to democratize the way the internet is being used. And so we find this to be really, really encouraging, and have certainly been proponents of seeing increased regulation that will only lend itself to greater validity around the asset class.
And Michael, I mean, I would agree with you, at least, especially in the House hearing. I was really impressed by the quality of the questions, but it feels like there's so many cooks in the kitchen when it comes to crypto regulation. I want to talk about the SEC because Grayscale, you've filed to convert your Grayscale Bitcoin Trust. It's the largest crypto fund in the world. You filed to convert that into an ETF, obviously. Physically backed ETFs for Bitcoin aren't allowed yet. But what caught my eye was in the past few weeks, both Grayscale has submitted a letter, and then Coinbase this week on Grayscale's behalf submitted a letter to the SEC, just really urging them to allow that conversion to happen. And I guess I'd love to hear why, first of all, and whether or not you've have a response yet from the SEC.
Sure. So the SEC have been exceedingly receptive to the crypto asset class overall, and we have been engaging with them, I would say at least since 2015, 2016, on our ETF endeavors for the Grayscale Bitcoin Trust, ticker GBTC. What's been a really encouraging and really meaningful milestone for the investment management industry is that this year we saw the approval of not one, but several Bitcoin futures-based ETFs. And that signaled to us a change in the posture of the SEC around these types of products. But when we did see that, we were also very quick to say that while that is a very meaningful step forward, well, what about spot-based or physically backed Bitcoin products like GBTC? And what's interesting is that these two products are going to be tied to that same underlying Bitcoin market, which is where the SEC has really historically had their issues. They want to see surveillance of the Bitcoin market and the types of protections in place that they see in equities and other asset classes. And there was a letter submitted on our behalf in filing for the ETF, right, that actually called out the fact that the SEC should really maintain an even playing field.
Michael,
yeah.
We unfortunately have to leave it there because we are running up against the clock. We love having you on. You got to come back soon. Please do. We really appreciate it. Michael Sonnenschein is Chief Executive Officer at Grayscale, joining us on the phone from New York City. You're listening to Bloomberg Radio, and this is Bloomberg Business Week.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stanovic and Katie Greifeld live in the Bloomberg Interactive Broker Studio in New York. It's just after 3:30 on Wall Street, and in just a few minutes, we are going to target the chart of the day with Kriti Gupta, Bloomberg Markets correspondent. Katie, where were you when oil went negative?
Oh my God, I was at my parents' house in New Jersey. I was watching the price of USO. It's a futures-backed ETF. Bet you weren't expecting all of this.
Nope,
detail.
I wasn't.
It was just insane.
It was.
I mean, it had such enormous ripple effects.
Well, just a little over a year later, we're talking oil at $100 a barrel, potentially. That's what the chart is about. More on that in a few minutes. In the meantime, a check of the trading day. Here's Charlie Pellet.
Hey, thank you very much, Tim and Katie. This is why I love working for this company. Where else can you have that kind of conversation? Where were you when? Here's what's going on. We've got the Dow, the S&P, NASDAQ, all trading mixed right now. Little changed on the S&P. We have got the NASDAQ Composite Index up right now by 0.5 point. The S&P, to be sure, down 0.8%, lower by 36 points. We've got the Dow down 431, 1.2% lower right now. 28 minutes to go before that closing bell clangs on Wall Street. 10-year yield right now 1.40% with the 10-year up by 0.1%. Gold down 49 cents, $17.98 the ounce. West Texas Intermediate crude down now by 2.4%, $79.67 a barrel. Actually, $70.67 right now on WTI. More on crude coming up in just a moment. Bottom line here, volatility absolutely gripping markets. Investors bracing for a rebalancing of the S&P 500 and the expiration of equity derivatives. Stock moves being magnified by intense activity in options trading, potentially making today one of the busiest days of the year. Southwest Airlines CEO Gary Kelly has tested positive for COVID-19 days after appearing with other airline executives at a U.S. Senate hearing. Governor Hochul says New York State reported 21,027 new COVID-19 cases, marking the highest daily total of the pandemic. And with an uptick in New York City cases, how much of this is Delta? How much is Omicron? That question this morning for Dr. Andrew Pekosh, a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health.
Our sequencing efforts here in the U.S. lag behind a little bit the efforts that are going on in the U.K. and South Africa, so we're not hearing about the Omicron cases as quickly as we should. It's quite possible that the surges that we're seeing now are contributed to by Omicron, because the data coming out of Europe is showing that this virus is at least as good as Delta, if not better than Delta, at transmitting in populations that have some immunity even.
Dr. Pekosh with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we track on a very regular basis, Pfizer down 2.7%. Its German partner BioNTech, its ADRs, they're up 0.6. AstraZeneca's ADRs lower by 1.7%. Moderna shares higher now by 3%. Again, recapping, equities trading lower across the board right now. Wave of selling coming into the market. NASDAQ down 21, drop there of 0.1%. S&P down 0.9. The Dow down 1.3%. Briefly, gold $17.99 the ounce, down by 24 cents. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, here with our chart of the day is Kriti Gupta, Bloomberg Markets correspondent. She's with us in the Bloomberg Interactive Broker Studio. We gave you a preview a few minutes ago, but Kriti, take us into it. $100 a barrel for oil?
$100 a barrel for oil. It's kind of hard to believe when we're talking about the Omicron variant right now, right? Because everyone's saying, well, what if we have to do more testing, more lockdowns, not just here in the States, but around the world? What does that mean for oil demand? But Goldman Sachs actually came out with a pretty interesting call. They said, well, $100 oil, that is actually a possibility, maybe just not now, maybe in 2023. And that's something you're hearing from airlines as well. Delta Airlines came out and said, well, travel in 2022 will be at 90%, but to really get to 100%, you got to wait till 2023 for travel and business travel in particular to rebound. So my chart of the day today looks at oil, not in dollars today, but in dollars all the way into 2023. So it's kind of like, what's that movie with where they travel in the car. What's it called?
Back to the Future?
Back to the Future.
Excuse me?
Sorry.
Excuse me? Wow.
I've seen it, guys. Don't worry. I just forgot the
You know
name
what's
for a
great? I'm the
second.
old guy in the room right now.
You are the old guy in the room.
An elder.
I'm the elder. I'm the elder millennial.
Yeah.
The
Geriatric.
The geriatric millennial is the term. Okay, I'm sorry. I interrupted you. Back to
No,
the Future
it's
you were
okay.
talking
Back
about.
to the Future. But essentially, that's kind of what me and our producer, Dan Curtis, did. We did some really funky math and where we calculated exactly what 2023 dollars might look like, taking into account inflation forecasts here on Wall Street. And then priced in, we did this extra step, we priced in oil in those 2023 dollars to see if hitting $100 oil then would actually be possible. And here's what we found. We found that we were actually not that far because in October, we actually hit a peak of $85 in 2021 dollars, but for 2023 dollars, because it's higher because inflation is going to be higher in the future, we actually got only $7 away from $100 oil. So we were right there. We were so close, and we might get that close again.
I was chuckling when you said that airlines are talking about business travel fully coming back, because the question I have, does it ever actually fully come back, right? We're in an environment
Your guess is as good as mine.
Yeah, we're in an environment with Zoom.
My
and with-
fingers are crossed. I have some conferences lined up. I'm just waiting for them to be moved on.
Yeah, but to the same extent that would have happened before COVID, who knows, right?
I don't know.
Yeah, I don't know. Hey, before we go, we let you go, Creedy. I'm wondering about what you have your eye on, because that's a company that's affected by higher oil costs.
Yeah, we're looking at FedEx here because oil is known as kind of an economic bellwether. So I was thinking, well, what other economic bellwethers do we like to look at? And one of the big ones in the stock market is FedEx. It's UPS. It's shipping activity. And FedEx actually came out with their earnings. And not only did they beat their earnings, they boosted their outlook. And a lot of that has to do with higher shipping prices and the fact that they're focusing on smaller shippers in particular rather than partnering with bigger companies, but then having to give them bulk discounts. And what that's ended up doing is giving them higher margins, higher profits, and ultimately able to hire more workers at higher wages. So they've actually held up relatively better compared to the likes of UPS or Amazon or even other corporations in America, simply because they got ahead of that, all because of Tim. A point that you've made, I think, on every show here is that they were able to pay their workers higher wages and really attract that talent.
Yeah, I mean, that's one of the big differences with UPS versus FedEx, right, is the idea of unions. And UPS has this unionized workforce, so they haven't faced the same employment challenges with people actually leaving, whereas FedEx uses a lot of contractors. Really fascinating stuff. The share buybacks, is that a big part of the surge that we're seeing in FedEx today?
It is, of course, because share buybacks always will be
$5 billion
help. Yeah, well, it'll also always help a stock. But I think for FedEx, on a day where you are seeing the S&P 500 lower, it's got to be those earnings, especially that labor piece, because it's been outperforming its peers. And as an economic bellwether, does that tell you a different message than oil is right now? Oil's down, FedEx is up, and they're both economic bellwethers. Where's the economy going? That's the question that remains to be seen.
Okay, so when is oil going to hit 100, perhaps?
According to current forecasts, 2023, but we will see.
Okay, well, there you have it. Creedy Gupta is Bloomberg Markets correspondent for Bloomberg News. She's with us in the Bloomberg Interactive Broker Studio. Be sure to sign up for Creedy's Chart of the Day. You can do that by emailing her at kgupta129@bloomberg.net. Also, check out her Twitter and her Instagram at Creedy Gupta News. Well, let's get a check of the latest world and national news. Denise Pellegrini is standing by in the 1130 newsroom. Hey, Denise.
Hey, Tim. Well, Pfizer and BioNTech are pushing back those plans to request authorization of their COVID-19 vaccine. We've been talking about it all day, and that's because children's age 2 to 5, they apparently generated a weaker than expected immune response in a study. So they may be looking at a third shot instead for those little kids. NFL is moving Seahawks, Rams, Washington Eagles games to Tuesday due to COVID-19 outbreaks. And COVID is boarding NHL plans as well. NHL postponing Colorado Avalanche, Florida Panthers games through December 25th due to COVID worries. And the Bruins game tomorrow night in Montreal also postponed. New York State reporting a new daily record for COVID cases, 21,027 new virus cases in a single day. And the biggest shows here in New York, Hamilton and Radio City Rockettes Christmas Spectacular, those are being forced to cancel some shows because of outbreaks. And the White House is warning the unvaccinated are looking at a winter of severe illness and death because of the nasty combination of Delta strength and Omicron's transmissibility. White House COVID response coordinator Jeff Zients says those who have rolled up their sleeves, though, will likely have an easier time of it.
If you are vaccinated, you could test positive. But if you do get COVID, your case will likely be asymptomatic or mild.
And that's White House COVID response coordinator Jeff Zients. And here's something to think about. At least one media outlet mentioning New Jersey Governor Phil Murphy as a possible replacement Democratic candidate if President Biden decides not to seek re-election. Citing President Biden's lagging political numbers, CNN among those publishing Murphy among the names of other candidates listed to replace Biden if he doesn't run. I'm Denise Pellegrini, and this is Bloomberg.
Thanks so much for that update, Denise Pellegrini. Do you know what season it is?
You tell me.
Yeah, well, it's bonus season.
Wow.
Means a lot of stories on the Bloomberg terminal about bonuses that are being handed out. The latest among them is another by Jenny Serrain about Jefferies giving special stock awards worth about $25 million apiece to CEO Richard Handler and President Brian Friedman, joining rivals and handing out large bonuses to remain key top executives.
Yeah, and I mean, you're seeing this across Wall Street from the top ranks down. I mean, we've seen so many read spikes on the Bloomberg terminal this week. I'm looking at two from just a few days ago. You have Goldman may increase its investment banker bonus pool by about 50%. JP Morgan said to weigh a boost of about 40%. So, I mean, the big banks, they're paying up.
Yeah, JP Morgan Chase earlier this week granted Daniel Pinto a special stock award worth around $25 million. That's ahead of his promotion to sole president of the biggest U.S. bank. Jamie Dimon, the company's CEO, was granted a similar special gift of stock appreciation rights in July to persuade him to lead the lender for another, quote, significant number of years. It's about retention, it's about competition, and it's about preventing employees from not just going to another bank, but even to private equity, for example, that we've seen happen over the last year. And also tech companies as well. I talked about this yesterday, but we've heard some banks like JP Morgan, for example, talk about all the tech jobs that they have, engineers, et cetera. And if you are perhaps in one of those positions, maybe you're also looking at jobs at Silicon Valley-based companies.
Definitely. And I mean, think about like some of the trending stories from this past summer, the summer before, that bankers were just getting so burnt out.
The Goldman analysts, right?
Absolutely. Yeah. What was it? The 13 Goldman? Something like that.
They were part of the Bloomberg 50 this year, I believe.
They were. And I feel like they really kicked off the conversation. And I mean, you're still working incredible hours if you're a banker, but probably millions of dollars helps in bonuses.
Yeah, that's true, for retention and, of course, for staying at the firm. You're listening to Bloomberg Business Week. Coming up next, we are driving to the close on this Friday afternoon. This is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell on this Friday. We are on track for a down week. The S&P right now slumping 40 points, down by 0.9%. Volatility gripping markets. Investors bracing for a rebalancing of the S&P 500, along with the expiration of equity derivatives. The Dow now lower by 465 points, down 1.3%. Nasdaq is down 17, a drop there of 0.1%. 10 years up 2/32, 10-year yield 1.40%. Spot gold down 0.1%, $17.96 the ounce. And West Texas Intermediate crude is down 2.5%, $70.60 a barrel on WTI. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
U.S. Secretary of State Antony Blinken's first official trip to Southeast Asia was cut short due to COVID this week. That was disappointing. Also disappointing is that it was a missed opportunity to push a U.S. priority: trade. When it comes to economic engagement in the region, the U.S. has been lagging. China trades nearly 3 times as much with the rest of Asia as the U.S. does, and it far outpaces Washington in economic diplomacy. China has also applied to join the CPTPP, the successor to the Trans-Pacific Partnership Free Trade Pact. The obvious course of action, and the one favored by America's partners in the region, would be for the U.S. to join the CPTPP too. A more open trade policy would benefit America's allies and America's workers alike. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It's Bloomberg Business Week, and it's time for a Drive to the Close. Katie and I just talking about the indices that we're seeing move lower on the day today. And look, over the last 5 days and for the week, we're going to see a down week, especially on the NASDAQ, looking like it's going to close by about 3%. Let's get into it with Vince Nichols, Global Equity Investment Strategist at BNP Paribas Asset Management. Vince, how are you?
I'm doing well. How are you all doing?
I'm doing well, thanks. Thanks for joining us on the phone from New York City. Vince, help us make sense of this week. I mean, where do we even begin? Obviously, global central banks, a huge part of it, inflation, a huge part of it, but also the rise of the Omicron variant and the changing tone that we're seeing not just in New York City, but around the country.
Yeah, I think those are all huge factors in all of this. And to the larger point, we're entering 2022 in a very different place than we entered 2021. Last year, we were coming out of the pandemic, or at least thinking we were. Huge amounts of stimulus feeding the economy, nice compares versus last year in both growth and economic fundamentals for corporates as well. And this year, it's obviously a lot different. Stimulus is rolling off. We're not going to see the same impact either from the fiscal side of things or from monetary policy either. And we saw that this week, as you mentioned, with the Fed now on a double of the pace that we originally expected for the tapering. And who knows where it goes from there either. So I think there's a lot of uncertainty going into this next year. It doesn't necessarily mean I'm bearish or we as a firm are bearish. But I think one thing that's probable for next year is more of the same of this, is a little bit more volatility.
And Vince, how do you position a portfolio around that volatility and around some of those different factors that you walked through? The fact that, it's clear we're not quite at the end of the tunnel when it comes to the pandemic. That much is clear. And like you said, the Fed doubling the pace of the taper, really taking a hawkish tone here.
It's tough. But also it's great for active managers, right? You're not going to just see multiple expansion and everything kind of rise in tandem. There's going to be differentiation in investments that are working, investments that don't work. I think it's important to focus on the bottom up, companies with cash flow, companies that have the ability to pass on inflationary pressures to consumers, and those are the companies with enduring competitive advantages, whereas others may face more margin pressure. Companies that are pre-earnings, if you want to be nice to them, or just non-profitable, to be a little bit more honest, those companies might be more challenged going forward and may have less of a bid from optimistic market participants. And you may see a decline in market participation as well, with less money in the retail traders' pockets. So I think, as I said, you're going to have more volatility, more dispersion. So I think important to focus on fundamentals. I think also, as we talk about inflation, it's while our base case would be that you're going to get a moderation of inflation next year and pretty much throughout next year, so decelerating pretty soon, but still above trend, and also very high upside risk, so a fat tail risk to the upside. And in that case, I think you need to be prepared to have positions that will do well in such an environment. So
Hey, Vince, when do you think inflation will peak?
That's a great question. A lot of people smarter than me would have said already that would have happened.
Yeah, hence why we've retired the word transitory, at least if you're talking to Jay Powell, right?
Exactly. And so not only the Fed, but I think economic forecasters at many banks and people that are doing this professionally would have thought so in many cases. And here we are, the last inflation report, the highest in decades, that more than 3 decades to be exact. And that's an inflationary environment that many people in my industry have not seen in their working careers. So it's going to be an interesting challenge. So to your question, when do we think it'll peak? I think base case is first half of next year. At some point, we are starting to see a lot of inflationary pressures ease, particularly the ones that we really deem to be transitory. So those are starting to roll over, but things like wage pressure, so some of these aspects of inflation may be more sticky, wages in particular.
Interesting.
And I think that could pose some upside risk to that outlook.
Vince, I'm hoping you can walk me through what this all means for the bond market, because if I look at the long end of the Treasury curve, I see a 10-year yield that just can't seem to stay above 1.5%. And I mean, we're talking about inflation, the fact that so many people have been wrong in trying to call the top. I mean, why can't we get long end yields sustainably higher?
That's a great question, and I'm a little bit out of my element here, but the one thing I will say when I'm commenting on the bond market is it's really surprising to see bond prices where they are, given the level of inflation that we're seeing. Such a large percentage of fixed income assets out there are having negative real return, and that's surprising to me that investors would be comfortable taking that on over a long period of time, unless there's more tactical investing in that area than I would imagine. So that's very surprising to me. And I think,
hey Vince, I know at the risk of you being a little out of your element here, I'm just wondering, in your view, as somebody who focuses more on equities, what is the signal that's sending you? What is that telling you? Why is that surprising to you?
It's telling me that a lot of things have been bid up in the last, certainly the last 18 months, but over the last decade as well, since the global financial crisis. You've seen we're in a bull market for bonds for, I think approaching 40 years now, maybe in excess of that. I don't know exactly. That's very surprising to me, but it also shows you that you're seeing bids across all asset classes. You're seeing it in even outside of equity and fixed income and real estate. Prices for assets universally are much higher, and I think that goes hand in hand with some of the accommodative policies that we've seen.
Hey, Vince, we're going to have to leave it there, but thank you so much for joining us on this Friday afternoon for our drive to the close. That's Vince Nichols, Global Equity Investment Specialist at BNP Paribas Asset Management. He joined us on the phone from New York City. Katie, we are about 2 minutes, I should say, away from the market close, about 40 seconds away from joining our friends at Bloomberg TV for our global simulcast. The Dow down just about 1.2% right now. The S&P 500 down 0.8%. The NASDAQ, though, moving into positive territory just in the last few minutes, or moving to the plus side, I should say, up about 0.1%. Well, coming up next, it is Beyond the Bell. This is our cross-platform coverage of the market close. We're going to be joined with our colleagues from Bloomberg Television. You can listen to us on the radio, you can watch us on Bloomberg TV, or you can check us out on our YouTube for our simulcast. You're listening to Bloomberg Radio. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Taylor Riggs, Kelly Lyons, counting you down to the closing bell this Friday afternoon. Here to help take us beyond the bell, it's our global simulcast partners, Tim Stenovic, Katie Greifeld in for Carol Massar, bringing together our Bloomberg television, radio, and YouTube audiences to parse the crucial moments of the trading day. And it's really about the trading week here, Tim. We started off relatively volatile here, and we're going to end the week almost just as volatile.
Yeah, look at the volume here, guys. Up on the S&P 500, we're seeing, more than 25% higher than the average just over the last 20 days. I know the Dow, it's not something we talk about a lot, but how about 30% higher than the average over the last 20 days, Katie?
Well, let's talk about the S&P 500 because, like you said, there's a lot of people trading today, and it feels like the vibe is really risk off. It just feels like in the last few days, it's become clearer and clearer that 12 hours of bullishness post-Fed was looking more and more like a knee-jerk reaction.
And I can't figure that out, Kaylee. We're thinking about if it's just raising rates, or is it the rate at which we're raising them and the lack of time in between them that maybe has the market recalibrating what that discount rate looks like a year from now?
And I think this is a particularly interesting conversation for tech because we've seen the NASDAQ 100 among pretty much the most volatile when we're looking at the major benchmarks. And it used to be that the NASDAQ 100 would take its cues from what we're seeing in the bond market. And yet, Romaine, we're seeing yields persistently low, even in the face of a Fed that may hike multiple times next year. We're still around 140 on the 10-year.
Still a market, though, that isn't that far off of the record highs. Do you remember a year ago when we were polling strategists, where's the S&P going to end in 2021? What do you think the average
was? It not even at 46?
It was 4,000.
Wow.
And keep in mind, we were trading around 36, 3700 back then. The average estimate was for us to end the year at 4,000. The highest estimate at that time was for us to end the year at 4,400. So here we are on this day at 4620 and change. That's down on the day, down about 1% here on a daily basis. That's also going to be, of course, a down week for the S&P 500 by about 1.9%. The Dow Jones Industrial Average down 1.5% on the day, about 1.8% here on the week. And the NASDAQ Composite going to finish the day, call it flat here, down about 11 points here. It's down on the week by almost 3% here. And the Russell 2000, look at this, the Russell 2000 poking into the green. That's your outperformer, up 1% here on the day, but that's not enough to recoup some of the damage that we saw in 3 of the previous days here. It's going to end the week down, Tim, by about 1.7%.
Yeah, look, incredible to think a year ago we were talking about forecasts, the average forecast being 4,000 on the S&P 500. A good reminder to take the forecast that we're getting for the end of 2022 with a grain of salt. For those keeping track, the S&P 500 year-to-date higher by more than 23%. The NASDAQ higher by about 17.7%, Kaylee.
Well, the other call that didn't necessarily go right was the call for value and cyclicals to outperform growth and defensives. And once again, you are seeing some of those value cyclical plays that underperformed in today's session. When you look beneath the surface of the S&P 500, it's the likes of the banks and energy. Some of the other financial players were among the biggest laggards. We're talking declines of around 2% or more. Only 3 of those subsectors are in positive territory. You had telecoms up, healthcare as well, and then actually autos has also seen a very volatile week, and that was just fractionally in positive territory, Katie.
Just real quickly, Katie, before you get to the individual movers here, I mean, when we talk about the estimates, Tim, and going into 2022, I mean, we just came out with our latest latest survey yesterday here. Right now, the average is 49.50 for where the S&P should end 2022. The highest estimate on here is right around 5,330, and the lowest is at 4,400.
It's like a 20% gap.
Yeah.
Well, that's been one of the themes in the past year and a half, is that the gap between the highest and the lowest estimate, if you look at what strategists are forecasting for the S&P 500, that gap is, I think it's close to the third widest in a decade. So, I mean,
How many standard deviations?
feels like a lot, right? That's a question for Taylor, but I got to get you guys these gainers because Kaylee just showed a lot of red on the screen. I want to bring some good news. We got to look at Royal Caribbean. It closed about 5.3% higher. It's still going to end the week lower by nearly 4%, but it's one of your top gainers today. And guys, we were talking about this an hour ago, that it feels a little out of sync to see a cruise line rally today with all of these negative headlines we're getting about the variant. But Taylor, like you said, you have to look at deaths and hospitalizations. Let's move on to FedEx, though, because FedEx makes a little bit more sense. We do have some fundamental earnings out yesterday, and the big takeaway there is that some of the difficulty that FedEx has had hiring workers starting to ease. As a result, FedEx boosted their outlook. That boosted the stock by about 5%. And finally, I got to talk about Cerner. It's a medical records company. It surged, 13% today, something around that. And that's after the Wall Street Journal reported that Oracle is in talks to buy Cerner for about $30 billion. And as a result, you saw Cerner close at an all-time high, Tim.
Yeah, surprised you didn't have the biggest gainer of them all, AMC. What about the apes?
I mean, we could talk about AMC, but I'm even more stumped on that one.
It's hard.
19%.
A lack of fundamental news.
Is that
right?
just Spider-Man? It can't just be Spider-Man.
The Spider-Man news came out at 7:30.
Yeah.
My spidey senses are
throughout the
tingling.
morning.
Well, what other movie is playing this weekend, Tim?
Yeah, that's a good question. The premise of your question is incorrect for a meme stock. That's the issue, that there is actual news. Hey, let's talk about those decliners, because Katie brought up the potential Oracle deal that Dow Jones reported, and we saw Cerner shares pop. Different story for Oracle, finishing the day down by 6.4%. Pfizer finished the day down by 2.9%. It ticked lower after the company said, along with BioNTech, that it plans to study a 3-dose regimen of their COVID vaccine in young children who are 6 months to 4 years old. So that's a move that may extend the wait for anxious parents with kids under the age of 4. I count myself in that camp. Rivian Automotive finishing the day down by more than 10%. Shares fell to the lowest level since they started trading last month after the debut earnings report revealed a slower than expected increase in production. An $85 billion company roughly yesterday. It was about a $98 billion company. $1 million in revenue.
Yeah, thank you.
Yeah.
We'll leave that at that.
I tweeted that earlier, and I got a nice reply that said, hey, let me tell you something about stocks. They're valued on the future, okay? So,
But what if the future is
discount
bad?
rates, pesky fundamentals. I hate when it gets in the way. Let's talk about those discount rates, Tim, because you bring it up. This is incredible. When you think that a central bank, the central bank to the world, the Federal Reserve, met this week and turned hawkish, and yields on the week did nothing, Romaine. This is incredible. The 2-year yield started Monday at 63. We ended at 64. Let me get my mouse to work. The 10-year started at 142, ended at 141. The 30-year started at 180 and ended at 182. I mean, this is pretty incredible when you think just how far we have come on the weekly and how far we haven't come.
Yeah, and I don't know if we have a yield curve we can put up real quickly, but you talk about the flattening that we saw, the 530s right now, just looking at it right now, roughly around 63, 64 basis points. And to see it on a chart here, this is a 210, so you get a little bit more perspective. It's more dramatic on the 530s, but you see that just downward, the movement. And it's really been going down ever since really kind of the middle of the year back in June here. And it kind of makes you wonder, we had this hawkish pivot, the new man out of Jay Powell, and the bond market's like, no.
So is that a bond market that's still assuming that the Fed's going to make some kind of policy mistake and that it's going to choke off growth down the line?
Your favorite.
I'm losing my train of thought now because these two are talking.
Yeah, that tends to happen on the show.
Flatter.
Welcome to our Friday afternoon
show.
Okay, Tim, let me bring you back to, on a very serious note. Matt Maley and Ira Jersey both this week said the equity market should have been paying attention to the bond market. The bond market on Wednesday didn't move. That was telling us something, that we're maybe still unsure. We're not sure how we feel about a long-term terminal rate. We're confident the Fed's moving and terminal rates long end aren't going anywhere. You could sort of take all of these signals if you wanted.
Well,
Go ahead, Romain.
Yeah, well, I just real quickly here, and we always mention the negative real yield here, which is still camped out at negative 1%.
Yep.
Why haven't we seen that come off the floor?
I don't know.
I mean, you could get into the tips market and the fact that the Fed has bought so much of the tips market. I forget the exact percentage about how much of the tips market they control. The real yield, I don't want to go too into this, but so many people have argued to me in the past few months that the signal that you can take from real yields, it's not as clean as it once was just because of how much Fed buying there has been.
Where are you having these arguments? You're just walking down the street?
Mostly over ID, just furiously
Okay.
typing on Friday afternoons.
Wow. Romain,
Taylor, do you
just
have
a good
Taylor,
way.
you hosted the Real Yield today, so you should have a lot to talk about on
We
this.
had
Do you know Taylor's hosting like 4 shows today?
We had a great real yield show. We renamed it the Negative
That
Real
lightning round
Yield
was
Show. But really important when you're thinking about, and this is a debate, we're going to get screamed at the minute I open my mouth and say this.
What's that?
Buying fewer bonds isn't tightening. You are just easing less. That is why it is negative 1%
Are we
on
not
the
going to
real
mention
yield.
Christopher Waller's comments? Because I thought it was interesting. I mean, I have no idea, where he's going with this. But it gets to the idea. He's basically said just what you said. Basically that you want tightening, you draw down that balance sheet.
Right.
You move up the pace of hikes. And then who did we have on earlier? Mimi Duff? Said 5 hikes in 2022?
Yeah. Yeah, well, and we were talking with Ira Jersey about that yesterday as well. He thinks that the runoff could come in tandem with the first rate hike, and some in the market would tell you that could be as early as March. And then we're having the real conversation about tightening.
Where did Carol go?
It's the holidays, Romain.
People are allowed to take vacations, right?
Didn't even get to the dot plot.
She'll be back next week, don't worry. All right, don't worry. We're going to have to leave it there. That does it for our cross-platform coverage on radio, on YouTube, and, of course, on Bloomberg TV as well. Everybody have a great weekend. We will see you same time, same place on Monday.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld live in the Bloomberg Interactive Brokers studio in New York. So here is how the week ended. We are seeing the Dow finish down 1.7%, the S&P 500 down just about 1.9%. We can go ahead and round that up to 1.2%. The NASDAQ finishing the week down by 3%, but we are solidly in the green year to date. Just a reminder that even though we've seen this volatility over the last few weeks, still north of 23% in the S&P 500, 15% in the Dow, and 17% in the NASDAQ. Let's get the latest world and national news. For that, we turn to Denise Pellegrini, standing by in the 1130 newsroom in New York. Hey, Denise.
Hey, Tim, thank you. Well, we do have those floods of people coming down with COVID. New York State now reporting a new daily record for COVID cases, more than 21,000 new virus cases in a single day. And Dr. Ian Lustbader, he's professor of clinical medicine at NYU Langone Medical Center, telling us here on Bloomberg Business Week Radio that once people get sick, it just may be hard to get treatment at this point.
Unfortunately, we don't have a lot of treatment now available for them. The monoclonal antibodies we are using, but now they're going to be rationed a little bit.
And so that's Dr. Ian Lustbader, professor of clinical medicine at NYU Langone Medical Center. And we also heard from New York Governor Kathy Hochul. She says there's no need to shut down New York City schools or place of work due to the Omicron variant. She says Omicron appears to spread more quickly, but it just seems less severe.
I don't want this economy to shut down again. It was just so painful. And I want kids to stay in school. I want people to go back to their universities. I don't want to have this artificial suppression based on fear.
And Hochul also says if you're vaccinated, boosted, and masked, you'll be safe. New York City's biggest shows, though, Hamilton and Radio City Rockettes not listening. Christmas Spectacular has been forced to cancel shows because of outbreaks as well. And the NFL saying it'll be postponing games this weekend. In Cleveland, the Browns matchup with the Raiders is postponed to Monday. Sunday's game in L.A. between the Rams and the Seahawks and the Philadelphia Eagles contest, that's pushed back until Tuesday. And in the NHL, all games for the Avalanche and Panthers postponed at least through next weekend. And this could affect whether those hockey players will be allowed to compete in the Winter Olympics. I'm Denise Pellegrini. This is Bloomberg.
Thank you so much for that update, Denise Pellegrini. Tim Stenovic and Katie Greifeld live in the Bloomberg Interactive Brokers studio in New York. Katie, our own Kate Crater, who I think, I say this all the time, she has one of the best jobs in the Bloomberg newsroom.
Oh, definitely.
Yeah, because she gets to write about food. And also, if you follow her on Instagram, you see she gets to eat some incredible
Oh, I do.
dishes.
Yeah. And she goes to a lot of physical restaurants, Tim.
Yeah, in this day and age, I'm going out tonight to a
That's
restaurant.
huge.
Yeah.
Where are you going?
I mean, just a small restaurant in Brooklyn by my apartment.
Okay.
It's my wife's birthday this weekend.
Happy birthday.
Yeah, thank you. I will tell her you said it. I want to talk about the story that Kate wrote about TikTok creating virtual restaurants using its viral food hits. That's why you said she goes to real restaurants, right?
That is.
Yeah.
That is.
It was just a matter of time, Kate writes, before TikTok got into the restaurant business. On December 17th, the platform announced a partnership with the virtual dining concepts to launch delivery-only TikTok kitchen locations across the country starting in March. So food and recipe videos have become a key part of the site's programming, clips racking up millions of views. The company recently reported that 1 billion people worldwide use the platform each and every month.
I love that lead. It was just a matter of time before TikTok got in. I don't know about that. But in any case, virtual dining concepts successfully backed celebrity and non-celebrity restaurants, most notably Mr. Beast Burger, that is. It has been a breakout hit. It was launched in fall of 2020 by a YouTube star, Jimmy Donaldson. And again, sold 1 million burgers in 3 months, 1,500 locations in the US, Canada, and the UK.
Wait, real burgers though, or virtual burgers?
I see. I can't keep
Are
up.
we in the metaverse or are we in real life?
Are we in Web3? Maybe.
The TikTok kitchen menu will be based on the app's most viral food trends, including baked feta pasta. That was ranked as the most searched dish of 2021 by Google. Also planned for the opening menu are pasta chips, that's cooked pasta shapes that are cheese-coated and air-fried, as well as a smash burger and corn ribs, that sounds good, made from the peeling off the sections of corn and coating them with spices and Parmesan. The menu will change quarterly to start. If a dish starts going viral, there'll probably be opportunities to add it to menus. Check out this story on the Bloomberg Terminal in the Pursuit section of Bloomberg Business Week.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. A losing week for the U.S. stock market. For the week, the S&P 500 index was down 1.9%. Today, the S&P tumbled 48 points, lower by 1%. The Dow today down 532 points, down 1.5%. And NASDAQ this week, today was down 10 points this week. NASDAQ fell by 3%. Volatility gripped financial markets. Stock moves were magnified by the quarterly expiration of options and futures. Fed Governor Christopher Waller says rates could rise as early as March following a decision to end asset purchases sooner than planned. 10-year yield 1.41%. Spot gold down less than 0.1%. $17.98 the ounce. And West Texas Intermediate crude down 2.7%. $70.40 for a barrel of WTI. After earnings today, FedEx rallied 5%, while Rivian, the electric truck maker Rivian Automotive, lowered today by 10.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really appreciate it. Well, a big part of the conversation when it comes to financial literacy has to do with building credit. But as Lily Liu found, that when you pay rent on time, you're not actually rewarded when it comes to building credit. You're not rewarded for giving your landlord thousands of dollars each month if you're doing it on time, hence the app Pinata. Lily Liu is Chief Executive Officer of Pinata. Lily joins us on the phone from Los Angeles. Lily, how are you?
Hi there, doing well. Thanks for having me.
Well, thanks so much for joining us. Help us understand what exactly Pinata does and how it helps reward people for paying their rent on time.
Absolutely. Pinata, we're the only rent rewards program that rewards all renters across the country when they pay their rent in full and on time. Now, keep in mind, renters, they do not have to change how they're paying for rent. They pay exactly how they're currently paying for rent. All we need to know is that you got your rent in full and on time, and you get a series of rewards on our program. You have the ability to also have that payment reported to the credit bureaus to get that credit score boost.
And so does Pinata require buy-in of sorts from the landlords in this scenario?
Great question. We don't. We're actually open to any renter across the country, regardless of who you rent from. And so you can download Pinata. You just search for Pinata Rent in the App Store. You sign up for your free account, and there are a couple screens that ask you for some information. And after that, every month, you're going to get your Pinata cash. You can spend that on a bunch of different emerging brands and big name brands like Costco, Amazon, Target, Walmart, on things like everyday essentials to groceries, gas, home goods, health and fitness, and more.
Lily, how does the business work? How are you able to offer those rewards just by people paying their rent on time? Where do the margins come in? Where does your money come in?
Yeah, so we have a multi-sided business model. We work with brands that are on the platform. Now, keep in mind, some of our brands we pay for out of pocket as a benefit to our renters, and a lot to participate in the program as well.
Hey, Lily, we're going to hold off. Lily, we're having a little trouble with your connection. The team in the control room is going to try to get you back and get that connection set. In the meantime, just stand by because we're going to try to get Lily Liu, the CEO of Pinata, back on the phone with us. She's joining us from Los Angeles. Katie, it's a really interesting question in the idea of how Lily's able to do this, Pinata's able to do this without getting the buy-in from landlords. Because when I was reading about this, I actually thought, okay, well, this seems to be like a B2B thing where you have to get a major corporation, perhaps like a large landlord, to participate in the program in order for it to work. But it sounds like you can actually have, a mom and pop landlord. If that's your landlord, you can actually get rewarded that way too.
Yeah, I was wondering that as well. And hopefully we get Lily back, because I'm also curious to hear how the pandemic played a role in this as well, because as we know, rents went crazy.
All right, well, let's bring back Lily Liu, the CEO of Pinata. Lily, come back in here and talk a little bit about how you're able to make this work business-wise. Tell us the model.
Absolutely. So we work directly with brands. And again, oftentimes many of our brands we pay for out of pocket. And then many of them pay to participate on the program and on the platform as well. These are brands that want to give our renters things for free and want to give them rewards, hopefully building up great rapport with the renters, and they find new customers that love their products and their brand as well. And so that's part of our business model. We also work directly with property management companies. And so in that case, what they're doing is they are giving access to their renters to a premier rewards program. So their renters get even more Pinata cash every month to use on those great rewards. They also have the ability to have access to additional gift cards and other great perks in the program. But again, keep in mind, regardless of whether or not your landlord or property management company is partnering with Pinata, you can sign up for free and use the program. So those mom and pop landlords, they can all have their renters participate, and they don't have to have a direct relationship with Pinata.
And Lily, talk to us about, where you see the pandemic fitting in with this, because, like I was just saying to Tim, you've seen the rental market really go crazy. Initially, you saw rents fall in cities during the real dark early days. Now it just feels like rents are going higher everywhere. How do you see that, impacting sort of demand for Pinata?
Absolutely. 2021 was the most unpredictable year for real estate. Who knows where 2022 will land, although we're predicting that rentership will continue to increase next year and outpace home ownership, obviously with the rise of mortgage rates projected to hit near 4% by end of next year. That even while rental rates are increasing, a lot of consumers will have no other option. So whether or not you're renting as a predicament or you're renting as a lifestyle choice, which many of our renters are increasing to rent because of a lifestyle choice, it gives them flexibility on location with working from home. Consumers are looking for different things. And so what we anticipate is obviously a continued increase in renters participating on the platform. 2021 was our biggest year, had incredible growth from renters and from property management companies looking to give more back to their renters. One of the big things that inspired Pinata is that we get points for buying coffee. And I always look forward to getting that free 10th cup of coffee, but yet 10 months of rent on time and I get nothing back. And so, again, we're really flipping the model here for all Pinata renters.
Lily Liu is CEO of Pinata, joining us on the phone from Los Angeles. Lily, you got to come back. We got to have more time with you. Thank you so much for taking the time and joining us. Well, coming up in just a few minutes after a check of the markets and, of course, traffic, we are going to talk to Expensify CEO David Barrett. The company reported earnings yesterday. We'll talk about taking the financial services company public in recent months. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenevec and Katie Greifeld live in the Bloomberg Interactive Broker Studio. Expensify is a payment app. It works with businesses and individuals to make it easier to manage expenses, bills. The company reported earnings yesterday. Shares moving higher today to the tune of 1.16%. In just a few minutes, we are going to catch up with David Barrett, the founder and CEO of Expensify, the company going public just about a month ago. We're going to catch up with him and get the latest on earnings and how 2022 is looking. In the meantime, a check of what happened with this trading day. Here's Charlie Pellet.
All right, let's begin with the week, because what happened for the week? It was down. The S&P this week dropping 1.9%, Tim. The Dow this week down by 1.7%. NASDAQ this week down 3% as we head into the weekend. Today, volatility gripped markets, stock moves magnified by the quarterly expiration of options and futures. Heavy trading volume today with the S&P extending its weekly slide. And with the holidays fast approaching, it could have been the last day of 2021 with enough liquidity for investors to trade in and out of large positions. Your closing numbers: S&P down 48, drop of 1%. The Dow down 532, a decline of 1.5%. Volatile day with NASDAQ swinging between gains and losses. By the time it was all said and done, NASDAQ lower by 10 points today, down 0.1%. 10-year up 1/32 with a 10-year yield 1.40%. Gold down 94 cents, $17.98 the ounce. Little change today, down less than 0.1%. Crude, big story. West Texas Intermediate slumped 2.8%, down 2.05 a barrel, 70.33 for a barrel of WTI. Now, what about the outlook heading into the new year? Vince Nichols is global equity strategist at BNP Paribas Asset Management, and he was our guest right here on Bloomberg Business Week.
I think there's a lot of uncertainty going into this next year. It doesn't necessarily mean I'm bearish or we as a firm are bearish, but I think one thing that's probable for next year is more of the same of this, is a little bit more volatility.
Shares of Cerner Corp surged today following a report that Oracle is in talks to buy the medical records company for about $30 billion, part of the software maker's push into healthcare. Cerner up right now, up today by 12.9%. Oracle, though, heading the other direction. Tough day for a lot of tech stocks, I might add, but Oracle down today by 6.4%. Recapping equities lower with the S&P slumping 48 points, down 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, Expensify is a payment app. It works with businesses and individuals to make it easier to manage expenses, bills. It reported earnings yesterday. Revenue coming in at $37.4 million. It's an increase of 72.6% from the same time last year. The net loss was $6.3 million. That was compared to $6.9 million for the same period last year. The company, though, saying this was due to an IPO-related bonus expense of more than $26 million. That impacted a net loss and adjusted EBITDA. Joining us now is David Barrett, the founder and CEO of Expensify. He joins us on the phone from San Francisco. David, how are you?
Doing great, thanks.
Hey, so I want to talk a little bit about what the journey to becoming a public company has been like for you, and also what it's been like just over the last month as you've watched your company shares, move a lot higher and also move a lot lower. We should say that shares are higher to the tune of about 30% since the company IPO'd, though about 28% off of highs reached in late November.
So actually, I have no idea. I didn't look at the share price since I left the studio.
Really? Wait, hold on.
The first thing we did.
You didn't check the share price? Yeah. You haven't checked the share price since when?
Since we left the studio on IPO day.
Wow.
We set up a rule internally saying it's like, look, it's a spoiler. Like, we're here for the long haul. We're not here to make just results like tomorrow, next quarter, wherever it is. Everyone in the company is focused on very long-term results. And so, no, I only pay attention to the value we're creating over the very long term.
That's so interesting because I talked to someone like Michael Dell, who has been in, in public markets for decades. And he writes in his recent book that it's like, compares it to kind of a report card and talked a lot about the anxiety that it brings when, investors don't believe in you.
Yeah, I mean, I'd say, but investors aren't my customer. I would say, like, you buying my shares doesn't actually make the company any more money. Everyone's focus needs to be on how do we build product, how do we get that product in the hands of customers, and how do we generate very long-term cash flow. Everything else is just a distraction.
I think that's a really refreshing perspective. I mean, we spend so much time talking about the market here, but like you say, investors aren't necessarily your customers. But I do want to talk a little bit more about the IPO because you founded Expensify in 2008. You didn't go public until 2021. Why was now the right time?
Well, it just really came down to we wanted to provide liquidity to our early shareholders. I mean, like we're a profitable company. We didn't need any money. We have all the resources we need to keep growing. But if you have investors in with like a 10-year LP requirements and they're like 11 years in, at some point they're like, look, it's not my money. I need to give it back. And so we actually did leveraged buyouts of early investors. We took on debt because we're public or a profitable company and bought out early VCs. But that only works for so long. At some point, we're like, look, there's no future where we can keep buying out everyone through leverage debt. Like, we just have to go public eventually. So once it was no longer an if, but a when, then it came down to why not today? Like, it's better to be growing in a public company than growing as a private company if you're just growing the same all the same. I'd rather have the liquidity than not. So we just decided, look, there's really no reason to wait. Let's just do it right now.
I would imagine, though, over the last 13 years, you've gotten some serious offers to be acquired. That could have been a different path.
Yeah, but that's not very fun. Then what I'd do? Just start all over and create an entirely new company? Like, that sounds like a huge pain in the ass. I would much rather just, like, I worked so hard to build this company, to hire this team. I don't want to start over and, like, have 13 more years of effort to get back to where I am right now. Like, so, we're just barely getting started here.
So does it feel any different being a public company than you were a private company for more than a dozen years?
It feels great. I would say, I think that the big challenge for our company is always having the courage to believe in ourselves, like overcoming this idea of the imposter's dilemma. And I think like now we're a legit multi-billion-dollar public company and like, with employees and offices all over the world. Like at some point we have to accept maybe we do know a thing or two. And I think that the confidence that's given employees to just really believe in ourselves and believe in our product vision has been really palpable.
And so we're coming back with you. We have just about 30 seconds, though. But this was your first earnings report as a public company. It seems like what got a lot of headlines was the launch of your free plan.
Yeah. And so it's basically when we started our card first, we were targeting just cross-selling to existing customers. The new free plan is targeting an entirely new class of customers. They have very, very simplified requirements. And then so, yes, it's opening up the market even further.
Hey, David, we're going to come back with you, so sit tight. We're going to do some news, and we'll be back in just a few minutes. We're talking to David Barrett, the founder and CEO of Expensify. He's joining us on the phone from San Francisco. Katie, when we come back, we're going to have a good bit of time with him. We got to talk blockchain.
Oh, my gosh. I need to talk about the blockchain. We only did one block on it.
Yeah, I know.
Oh.
So far.
So
we
far.
have an extra block to do
So far.
later in just a few minutes. Once again, David Barrett, the founder and CEO of Expensify, joining us on the phone from San Francisco. In the meantime, let's get a check of the latest when it comes to world and national news. Standing by with that is none other than Denise Pellegrini. She's in she's in our newsroom here in New York. Hey, Denise.
Yeah, I sure
Not
am.
in D.C. You're here in New York.
Yeah, Tim and Katie, and we are staring down here in New York and in the whole tri-state area a new wave of school closings and Broadway shutdowns as well. The Rockette show being canceled too. That's as COVID cases rise in New York State to a record. But Governor Hochul is standing firm. She says when it comes to hospitalizations and deaths, there's just no comparison between now and the tragic pandemic peak of 2020.
We are in a far better place than we were so many months ago with the tools we need, the weapon we need, and that is the booster shot in particular.
And Hochul also says it does seem Omicron spreads more easily but causes less severe disease.
Staying tuned for any other developments. We find out that the new variant is getting people sick, but we're not seeing that evidence just yet.
And Hochul there on MSNBC. Meantime, MJ the Musical canceling all performances through after Christmas. Moulin Rouge and Hamilton canceled for tonight, and performances for Mrs. Doubtfire also canceled tonight. And that's through Sunday. And multiple NFL and NHL games also being delayed or canceled. The woman accused of recruiting and grooming minors for convicted pedophile Jeffrey Epstein to abuse won't testify. This is Ghislaine Maxwell. She says there's no reason for her to take the stand. And at least one media outlet is mentioning New Jersey Jersey Governor Phil Murphy as a possible replacement Democratic candidate if President Joe Biden decides not to seek re-election for president, citing President Biden's lagging political numbers and the fact that he's 82 years old. CNN also naming Vice President Kamala Harris and Transportation Secretary Pete Buttigieg, Governor Murphy among some of the other candidates listed, along with some other prominent U.S. senators and other governors. Global News 24 hours a day. This is Bloomberg.
Thank you so much for that update, Denise Pellegrini. Well, our team, especially Spencer Soper, who covers Amazon, has been all over the past week. The aftermath of the tornado on December 10th that killed scores of people, including 6 workers in one of Amazon's warehouses in Edwardsville, Illinois. We're learning from him and the team, including Michael Tobin and Michael Smith, in recent days as text messages between an Amazon delivery driver and her boss began about 80 minutes before a tornado struck one of the company's warehouses there. A dramatic exchange casting in sharp relief the chaos that can ensue when disaster hits and disagreements erupt when it's time to heed warnings and cease working.
Yeah, and Bloomberg News did obtain the texts. They took place in the 7 p.m. hour, and they're pretty gripping. The driver is saying, the alarms are going off. What should I do? I'm going to come back home. And dispatch is saying, if you do decide to come back, the choice is yours. It won't be viewed as for your own safety.
Yeah, a few minutes later at 7:40, the driver reporting that tornado alarms are going off over here, and dispatch saying keep driving. We have to wait for word from Amazon. If we need to bring people back, the decision will ultimately be up to them. I will let you know if the situation changes at all. I'm talking with them now about it. We should note that Amazon has been opening warehouses by the hundreds in the past few years. They say the Edwardsville facility complied with all construction regulations and that proper safety procedures were followed when the tornado struck. The company says its people followed federal guidance to take shelter immediately when there's a tornado warning and likely saved many lives. But in the end, workers who bunkered in a designated safe zone survived, while 6 others perished after being stranded on the end of a facility that bore the brunt of the storm, Katie.
So Amazon has its own investigation of what happened. You also have the U.S. Occupational Safety and Health Administration has opened its own probe into the deaths, and Illinois' governor has also said that building codes may need to be toughened as these storms become more frequent and more deadly.
Be sure to check this story out. We're going to send a link to it on Twitter. You can also check it out on the Bloomberg terminal and Bloomberg.com. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A volatile Friday, losing week for the U.S. equity market. Volatility gripping markets today with stock moves magnified by the quarterly expiration of options and futures. The S&P extending its weekly slide. Today we saw the S&P drop another 48 points, down 1%. NASDAQ down 10, volatile session there, swinging between gains and losses all day long. In the end, though, a loss of 0.1%. The NASDAQ 100 index down 0.4%. The Russell 2000, though, interestingly, had an up day, advancing by 1%. The Dow down 532, down 1.5% today. 10-year yield 1.40%. Spot gold down 67 cents the ounce to $17.98. And West Texas Intermediate crude oil down almost 3% today, falling $2.13 a barrel to $70.25. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you. Still with us is David Barrett. He is the founder and chief executive officer of Expensify. He joins us on the phone from San Francisco. And David, I was looking at your bio, and there's a line in there that caught my eye that you created Expensify's blockchain-powered database a year before Satoshi's white paper on Bitcoin. There's not many people who can say that. Tell me, why were you looking at the blockchain all the way back in 2007, 2008?
Yeah, well, it wasn't called that then. That name was invented later, I guess. But it's basically, I was starting off this company. I needed to build a database that could replicate an incredibly high volume and security. And I just was an individual engineer with, my background's I've been a programmer since I was 6. Distributed systems were my thing for a very long time. And I just had a problem I needed to solve. None of the databases at the time offered what I needed. I couldn't afford Oracle because I was just a random dude. And so I'm like, screw it, I can just build this myself.
So explain what it means to people who might not be familiar that it's blockchain powered.
Well, basically, blockchain is a replication technology. And what that means is it allows you to have multiple copies of the same data in multiple locations and cryptographically guaranteed that they're exactly the same. And so blockchain under the hood is really just a method of ensuring data integrity across multiple locations. Now, there's kind of 2 different kinds of blockchains. There's the public blockchains like Bitcoin and things like this. We use a private blockchain, meaning it operates only on our own servers, but we get all the same cryptographic guarantees that the replication is happening at an incredibly high performance.
So somebody could say, well, how is that necessarily different from the cloud?
Well, I would say the difference is, so we buy our own hardware. Like, there's this weird myth that somehow Amazon is cheap and fast and efficient. None of that is true. Like, we buy hardware that is so much more powerful than anything you can get in the cloud, and it's literally like a tenth of the cost. And so I'd say, no, we operate our own hardware, and we use blockchain to replicate the databases between our own servers.
When did you start using the term blockchain in your press materials?
We didn't even really think about blockchain for a very long time until I think we just like, wow, we should do something with Bitcoin because people seem nuts for this thing. And then we're like, well, wait a second, didn't we invent Bitcoin or invent blockchain?
Oh, we're talking to Satoshi?
Maybe. So man, if I were that, I would not be talking to you today.
No offense taken. Don't worry. Okay.
Yeah, but no. I think that for us, we view blockchain as just a important solution to that particular problem, which was back-end replication of very sensitive and important data at high volume.
And so it's cool that, it feels like blockchain is such a buzzword that's thrown around, but it seems like Expensify, again, you could argue you coined it. But I'm curious, do you think that when you look across the competitive landscape, do you see your competitors also sort of realizing the benefit that this type of technology holds?
Not really. And I would say, fundamentally, what makes Expensify different than everyone else isn't, yes, we've got the best corporate card, our best expense reports, all that kind of stuff. But most importantly, we have a completely different business model than everyone else. Everyone else basically has a very siloed sales model where you sell a customer top down, and that customer is an island. It only talks within itself. And so everyone has a very simple database because you only need a database as big as your biggest customer, and your biggest customer has, several thousands of employees. It's like, that fits in a small database. It's actually very easy. We have a completely different design. We have a single gigantic database that is replicated in multiple locations that stores all of our customers, which means our design is much more like a Facebook or LinkedIn than it would be like a Salesforce or Concur, because any two users in the Expensify platform can talk to each other, just like a social network. And so we're built to capture essentially all of the billions of financial conversations that happen not just inside of companies, but between companies and between employees in their personal lives. And so we're bringing all these financial conversations onto a single global platform, and that's a completely different technology stack than anything else out there. So our technology is not just for, kind of just to be fun or neat. It's there to support this radically different business model, because we aim to link 1 billion people through their financial conversations, just like Instagram links 1 billion people by talking about photography.
How do you get there? How are you able to get to that number?
Well, that's a great question, because you can't get there through a traditional sales model. Like, there just aren't enough salespeople to call 1 billion people and saying, "Hi, have you considered Expensify?" The only way you can get to a 1 billion user platform is through viral and word of mouth. Because, like, you didn't talk to a salesperson to decide to adopt Facebook. You just adopted it because all your friends did, and they told you. That's how people learn about Expensify.
Yeah, but you need the company you work for to adopt it, right?
Yeah, but it starts with the individual employee. Most companies, all of our competition, has to convince the CFO. We don't even try. We say, hey, any individual employee that hates their expense reports can download the app for free, sign up their company, and give it a shot. Again, it's free. And then we just onboard the company before the boss even knows. And so we call it our bottom-up adoption model. Every employee can pull us into the company, which is different than our competition, who can only talk to the top down.
And just for context, you guys have got quite a ways to go to get to 1 billion users. You are saying that
Yes,
more than
quite a ways, yes.
10 million people are using Expensify's free features right now.
And David,
go ahead.
No, you go ahead.
I was going to say, more companies use Expensify than any other platform. And so I think there's a reason for that. And we did it basically through this viral word-of-mouth model. And so that's, I think, the key to our historical growth and absolutely the key to our future growth.
And David, I do want to get your thoughts on the pandemic, because Expensify, you founded it 13 years ago. The past almost 2 years have been in a pandemic, when it feels like everything has moved.
Thanks for the reminder.
Online, I know, as if we needed a reminder. But I am curious,
forgot.
How that has, affected Expensify's business, how you're thinking about the path forward, especially as we start to see cases, unfortunately, rise again across the country.
Yeah, I think that was certainly very daunting when it happened, because we assumed we had a lot of exposure to business travel of a certain kind. And I think it certainly, took a ding. I mean, the pandemic is not the banner conditions for a fantastic year. But I think what we found is that business travel is different than people realize. We typically think of George Clooney up in the air, coastal travel. Most business travel is actually someone driving across town, like driving to Toledo. Buying some materials at the Home Depot and then doing a job. That's business travel for a huge fraction of people. And so I think that there's a lot of focus on what the virus does, but the virus isn't our customer. People are our customers. And people actually, their behavior doesn't move as quickly as the virus itself. Even Omicron, it hasn't changed really what people do. People are still traveling. People are still going into the office. People are doing a lot of things. Even in San Francisco here, they made this major mask mandate in California, except for San Francisco, where there's no change.
Well, look, we've had a big change in New York City in recent days. We hope that it doesn't end up happening in San Francisco, certainly. David Barrett, thank you so much for joining us. You got to come back. We had a great time chatting with you. That's David Barrett, the founder and CEO of Expensify. Just went public last month. It's been 13 years in the making. He joined us on the phone from San Francisco. Well, let's head to Washington, D.C. to check in with Joe Matthew. He's hosting Sound On. It starts in just a couple of minutes. Joe, what's the plan for today?
Hey, Tim. Well, we're going to be talking about picking up the pieces in January, because as you know, not anything happening this year, at least not from now in Washington. There's a traffic jam to get to the airport. Michael Steele, former RNC chair, will be with us about how the Republican Party plans to attack this whole issue in January.
Well, it sounds like another great program. We look forward to catching it starting in just a couple of minutes here on Bloomberg Radio. For Katie Greifeld, I'm Tim Stenovec. Have a great weekend, everyone. We will be back with you at 2 p.m. Wall Street time on Monday. You're listening to Bloomberg Radio. This is Bloomberg.